Hello everyone, Gianni DePoce here with you for TheoTrade, and today is Tuesday, the 21st of January, 2025. We are kicking off the shortened trading week. Markets were closed yesterday in observance of MLK Day, and it just happened to coincide with President Trump's inauguration. So we're starting the second term of the Trump presidency now, and markets are generally responding in a positive way so far. I mean, those that have been following along my trades over the last few months know that I don't like to take event driven trades. We've been following the trend. We've been commenting about the nature of the correction that we had. In the futures, it was a little bit less, but in the S&P 500, the cash index, we actually corrected 6 weeks from the all-time high back in early December into that low on Monday, the 13th of January just last week. And I actually wrote an article for the free Sector Leader Bullseye newsletter. You can find that at TheoTrade.com under the blog, where I talked about how the sector performances that we saw underneath the surface of the S&P 500 didn't really say that we were entering a risk off or a bearish market for that matter. And lo and behold, we snapped back from that low. We've seen some really good leadership. We're in earnings season now. Last week saw some banks come out and report some really strong results. Even though they talked down the economy, I'm not really too concerned about that because I think it's a classical case of sentiment not aligning with reality. And in this business of trading, sentiment follows price, not the other way around. So we are seeing the S&P lead to the upside today. It looks like we're on the verge of a continuation of the trend. Based on some of the metrics and tools that I'm working with, I wouldn't be surprised if the next few months were actually very bullish in the S&P. In fact, I have an upside target in the 65.50, 66.50 zone for the S&P 500. And yes, there will be some pauses and bumps along the way, but I do think that we can go even higher than that. In fact, I think a lot of the Wall Street estimates for stocks at the end of the year are not aggressive enough to the upside. That is, we're seeing the Nasdaq up too, although not as much as the S&P. That's okay for now, and I can live with that primarily because semiconductors are really starting to come back to life. This is a really good sign, and it's another week, so you're going to hear me say it again. We need to see semiconductors hit a new all-time high. It's been since July of last year that we've seen semiconductors hit a new all-time high. So if we get a breakout from this triangle formation here, which is a continuation pattern, I would look for some names to start doing well. We have some trades on in the space already in Semtech. We've talked about some setups in Broadcom as well as in Marvel that are looking really strong. And of course, there's Taiwan Semiconductor, which is trying to go for a new all-time closing high today. It came within a few cents of a new all-time high last week, but none of this is bearish. None of this is bearish. And, we have NVIDIA earnings in a couple weeks from now. Actually, it's actually a little further out. It's actually in late February. But you're coming up off a higher low here. This is a classical pattern that you see when the trend continues in NVIDIA, and I think it looks pretty good. We just need to be patient. I think this kind of ties into some developments happening with China, and in fact, I'm working on a blog post on that matter that I'm going to be publishing tomorrow that discusses what's taking place in China and how actually a Trump presidency could end up being bullish for the Chinese stock market. Now, in the big tech land, we're seeing some good price action from names like Amazon and Google, which hit a new all-time high today. But what we're seeing in Apple, a little bit concerning. As long as we don't take out this low from mid-September, I can live with this pullback. I do think we're closer to the end of this decline than the beginning. This could be some capitulation here unfolding. You do have earnings next week, so keep an eye on that for Apple. And then, of course, I'm watching Netflix here too as it comes out of a higher low. I still think what's happening in this space is pretty good, but some of the big movers today, you're seeing a nice rally in Redwire Corporation, up 44% on the day. This is actually a stock that we picked up last week in TheoTrade's $1 million trading challenge, and so that's definitely padding the returns. But you're seeing a lot of good moves in these space-related names. Like Intuitive Machines, seeing a rally to new highs, and other space names like AST also rallying. Rocket Lab, breaking out up 27% out to new all-time highs or new multi-year highs here. So, President Trump kind of alluded to this in his inaugural speech, kind of the space economy could be coming about, and that has a lot to do with advancements in artificial intelligence, advancements in quantum computing, and of course, a resurgence in nuclear power. And we're seeing a lot of names in that space do very well. Nanonuclear energy up over 20% on the day. We actually have a position in NuScale Power SMR, and in fact, I did a pretty in-depth presentation about this here at TheoTrade in the Trinity Trade program, when we talked about kind of the three sectors of the economy that are going to power us into the future: quantum computing, nuclear power, and cryptocurrencies. So those are all looking pretty good. And speaking of crypto, Bitcoin is near its all-time highs. We hit a new all-time high in the cash market yesterday. And then Ethereum trying to come back. It is down in the futures market, but overall still looking pretty good. I like the price action that we're seeing in MicroStrategy. That's looking pretty strong. Core Scientific also coming up off a higher low. So definitely good to keep an eye on developments in that space, as you have these meme coins going crazy. Have an exciting announcement coming on that front shortly for you. Probably will be in a place to share that next week, so stay tuned, because the developments in the crypto space are definitely something worth monitoring. I also want to talk about what is happening here in crude oil. We've been talking about this resistance zone, this technical resistance zone in the $76 to $78 area for quite some time. And, we rallied above it, and we were above it for a couple of days. And it looks like we may have completed a lower high with respect to the longer term trend. And I've talked about this area, this neutral zone between like 68 and 76 in crude oil, kind of being like the sweet spot. Trump said something in his inaugural address yesterday that I think really hit energy markets. He said, "Drill, baby, drill." And, some people might come out and think that, that means we're going to have an oversupply of crude oil, and that's going to hurt a lot of these oil companies because the price is going to go down. But also need to consider the fact that if there is deregulation, their break-even price might drop a little bit. And so we may be okay with having lower energy prices. In fact, we're kind of banking on it from a bull market standpoint, because I think that if energy drops, we'll see bonds continue to rally, and we're really in an important level today, retesting that former support turn resistance zone in the 30-year bond, as well as the 10-year treasury note. So if this rally in bonds is legit, I would expect crude oil to keep dropping, not necessarily below this support zone here at 65, 68, but definitely back into this neutral zone. We're already here right now, and that's what's going to keep inflationary pressures contained. Right now, I think the stock market is living and dying by inflation. And we had some inflation data recently that showed that it was tame. We had a little bit of a pop in energy prices over the last month, so we'll see if it trickles into the inflation data in a couple of weeks. But right now, the Fed's looking at cutting rates next time in June, July. So as long as we don't see crude oil experience a meaningful pop higher, I think the Fed will be able to maintain its rate cut trajectory, and that's going to help stocks. It's going to help tech, which we need. It's going to help semiconductors, and I think it's going to help China too. I think it's going to help China, because if you take a look at when the Chinese market really started to accelerate last year in September, it was just before the Fed started cutting rates. And so when the Fed cuts rates, it kind of eases the pressure on foreign countries when it comes to their monetary policy. The Fed really is like the central bank of the world. And that's why we've been looking at names like Kifu Technology that continue to look very strong, keeping a close watch on that one. But I think there's a lot of other names setting up in China that are opening the opportunities for an impressive bull run in that market in 2025. Also keeping an eye on precious metals here. A couple weeks back, I did a presentation on how gold and silver were looking good for this year. Still have those upside targets, basically looking for silver to return to its all-time high and gold to maybe rally another few $100 into the $3,200, $3,300 area. So that's pretty much what I'm looking at right now. We'll keep a close eye on the market's developments, but right now it looks like bulls are on the parade, and we could be within a couple of days of a new all-time high, which again would reinforce the bull trend. But the biggest thing that I'm watching right now is the price action in semiconductors. If semiconductors can hit a new all-time high, then we've checked all the boxes for stocks to continue higher. And I think that bears are going to be in for a lot of pain in the coming months. So that's all for now, everyone. Thank you so much for watching. Hope to see you in the TheoTrade chat room, and be on the lookout for that Sector Leader Bullseye article on the Chinese market tomorrow. Thanks again.